Hey guys, Tony here. So in this video, I'm going to go through a real EOB that I received a couple days ago from Caresource. Caresource is a Medicaid contractor here in Ohio. So you can see from this what my goal for you today is to understand the different components of an EOB. Now, first, what's an EOB? EOB stands for Explanation of Benefits. That is the paper report that you and the patient receive that explains what was paid, what was billed, what was contract adjusted, etc. ERA is called an electronic remittance advice. That is the digital version of an EOB. The ERA is what's downloaded from either a clearinghouse or from the payer directly. It's imported into your accounting software and posted electronically to keep track of patient responsibility, what the third-party payer paid, what was contract adjusted, and all the financial information that goes into a date of service. So obviously, this being a Medicaid plan, reimbursement's going to be lower than Medicare, lower than other third-party payers. But let's take a look at this. Let's break down some numbers so we can really see what's going on. So across the top here, certainly you see, myself as the rendering provider. You can see here, it's going to give you a check number. It's going to give you the amount, the total number of claims. So for 3 claims that were paid, this was the amount that was paid. It's going to have either a tax ID or an MPI, depending on how the claim is being processed. The payee, so while I was the rendering provider, the business is who the check was made out to. And then, of course, the date. So 5/19. Let's take a look here. We see line item, date of service 4/24. So the first thing to look at, now you can't tell from this electronic remittance advice, but we're looking at the difference between the date the payment was issued and the date of service. We usually are pretty good about getting our claims out every 24 to 48 hours. You can see here we're looking at just over a 1-month turnaround time from the date the service was rendered to the date the service was paid. Let's take a look at what else we have. So we have the CPT code. So this was therapeutic exercise. We see the charges for this payer. Now this is based on an established fee schedule. So this was $160 that was billed. I can tell you what you don't see here is the number of units. But for this particular case, this was a 4-unit visit, 4 units of therapeutic exercise. The payment was $65. So if you do the math right up here, 4 units at $65.76 reimbursement, they're paying $16.44 per unit for therapeutic exercise. Each unit, each CPT code is going to have a different reimbursement. The total adjustment amount, so the adjustment amount, that's the contract adjustment. That is based on the difference between the allowed amount from the payer and what was billed. So if we did some math and we added $65.76 to $94.24, the total is going to be $160. Now the $94.24, that is not money that can be collected anywhere else. With this particular Medicaid-based plan, we cannot bill the patient. The patient does not have a copay coinsurance. There is no deductible charge. So it's a zero balance being forwarded to the patient. The $65.76 represents payment in full for this particular date of service. Those are important distinctions. We are contracted with Caresource. Now, if we were not contracted and the $65.76 is what they paid on an out-of-network basis, there may be an opportunity to balance bill the $94.24 to the patient. Balance billing is charging the patient the difference between the allowed amount and what was charged. But in this case, we are contracted. We do not balance bill the patient. The $94.24 is not tax deductible. It's not anything. It just disappears. It's a readjustment of the price. A lot of providers will ask about that, if they can deduct that from their taxes. The reality is most likely your using a cash-based accrual system, cash-based tax system. If you were using an accrual-based accounting system, then there would be a reason to deduct the 94.24. But for most of us in private practice, that's not what we do. We only pay taxes on the money collected. We only take deductions on the money that has been spent. So that's it. If we look down here, another data service. So, looks like these were processed all on 5/19. Again, same thing, therapeutic exercise, 4 units, the paid amount, the contract adjustment amount, nothing else needs to be done, processed as the primary. In this particular case, there is no secondary insurance or coverage. So we're done. So this is what a Medicaid plan would look like for this particular payer on this policy. Now, that being said, you have a decision to make. You look at the 1644 per unit and you say, is that something that's doable? Is that something I can afford? And in another video, what I'm going to do is I'm going to talk about how in some cases you might accept third-party contracts that would be loss leaders, meaning I probably break even on a $65 reimbursement for a 1-hour treatment with one therapist one-on-one. But there's a couple of things here. So this could be rendered by a PT or an OT. This could also be rendered by a PTA or OTA. So if we're looking at a cost basis, a PTA OTA is gonna cost 70 to 80% of what a PT OT would cost. So there's going to be some savings opportunity there. Then, of course, there's going to be non-covered services. If you have those available, if you're going to provide those, we'll use an example like a dry needling or other things that you could offer in the clinic that are not covered by the particular payer. That would be an opportunity where you could charge a $25, $30 upsell. So it would turn this $65 fee into a $95 revenue. Those are things to talk about on another video, but I just wanted you guys to see what a real claim looks like for different payers. Guys, I'll catch you on the next video. As always, please take a minute, subscribe to the channel, show your support by leaving me a comment and letting me know what kind of questions or information you'd like to see next. I'll catch you next time.